This is the Forex Q&A podcast. This is VP, professional Forex prop trader here in the United States, answering your Forex trading related questions every Monday morning. Now, if you have a Forex trading related question that is on your mind, everybody gets one, so make it count. Go to nononsenseforex.com/askvp. There's a new contact form that I am pretty sure works. Fill that sucker out and I will respond to you typically within 48 hours. And what a nightmare this contact form has been. On the old one, I've had it shut down for almost 2 weeks now, and I am still getting people's questions trickling in, as recently as yesterday. Now that is very disturbing, because when I say that I am going to do something, I actually like to do it, especially if I say it publicly, for Christ's sakes. And so when I say that I'm going to get back to you within 48 hours, that doesn't mean 2 weeks. But because that old contact form is so messed up, that's how it's been going. So for some of you, sorry about that. It wasn't me. I respond pretty quick. But that old contact form is now gone. There is a new one. And the only thing it does not do anymore is put you on my email list. So for those of you who have already signed up, you are on it. There's nothing to worry about. But from this point forward, the only way to get on that list is to sign up on the sign-up form that I have to the right of the website. Now, I'm pretty sure it appears on almost every page. It's light blue, it's big, you can't miss it. And I do plan on sending something pretty cool before the end of the year. So if you're not already on board and you want on board, get on board. Now, one quick note, I am shooting this podcast late. It is 2 p.m. on Sunday, Pacific Standard Time, on December 16th, 2018. If you saw that contact form, the new one, and already asked me a question before I shoot this podcast, I did not get your question. Just go back in and do it again. There was some back-end stuff that needed to be fixed. I fixed it. It works. I sent myself a question. It came through nicely. So we should be good to go. And all I want for the holidays is to never talk about this stupid contact form ever again. So let's hope for the best and let's move on. Now, I did want to give a quick shout-out to those of you listening to this podcast on CastBox. If you take out YouTube, CastBox is the third most popular platform for the Forex Q&A podcast, right behind Spotify and Apple Podcasts. And I never, ever hear from you guys. You guys are the silent majority, and I just want to say thank you. And if any of you get time, go to this episode on YouTube, and if you could, in the comments section, check in and tell me why I should change from Stitcher over to CastBox. You guys know my on-again, off-again abusive relationship with Stitcher, which is my main podcast player. If one more thing goes wrong with them, I am jumping ship. I am switching teams. So CastBox Nation, check in, tell me what you like about it, and when the time comes, and it's going to come, that is the direction I will probably go. But I would like to hear some endorsements from you first, as far as the people who actually use it. Now on to this week's question. This week's question is from Lindsay from Naperville, Illinois. I think the first female question we've had on the show. I'm not 100% sure if it's a girl Lindsay or a boy Lindsay, but I will assume it's a girl. We'll play the odds. And Lindsay does what many of you do and sneaks that little second question in there. So this is a bit of a two-part question, but Lindsay asks, I'm a reversal trader turned trend trader thanks to your blog. How do I know when I'm no longer in reversal territory and into trend territory? And then the second part of that question was, and how do I know I'm not trading counter trend? So even though it was a two-part question, I really do like questions like this. This is something I don't think we've really covered. And I don't think it really needs its own video. I think we can pretty much cover this on one podcast episode. So let's attack the second part of that question. So for those of you who don't know, counter trend means taking a trade that is against the overall trend. Thus, in many people's eyes, making it a lower probability of actually winning that trade. Now, there are a few ways to tell which way the overall trend is going. You can just look at a chart. A lot of times it's very obvious. There's that old trick where if you are unsure, you can take whatever price of the currency pair was at the far left of the chart that you're looking at right now and compare it to where it is now. If the price now is higher, well, then that's an uptrend. If it's lower, then that's a downtrend. But here's the punchline, traders. It doesn't really matter for a couple reasons. One, it all depends on what you're looking at and how you're looking at it. What time frame are you on? How zoomed in or zoomed out are you? on your charting software. And, if you zoom out enough times, every trade you make could be a trend trade or a counter trend trade. 100% of them could be one or the other, just depending on how you choose to look at it. Yeah, there's these people who do these YouTube trading videos that will always say, oh, as you see here on the euro dollar, we are in a downtrend. And then they base their analysis off of that. And then somebody else could easily come in 5 minutes later and hit the zoom out button 3 times and say, oh, well, as you can see, the overall bias of the euro dollar is bullish. And then base their analysis on that. How you choose to look at your charts has a lot to do with whether a pair is trending one way or the other. So already there's not a whole lot of consistency there. Second, and I think a lot more important, is if you remember who moves price up and down, it's the big banks. And when it comes to whether a pair is trending or not, the big banks don't care. What they mainly care about is where most of the retail traders' money is going. Where the price is compared to what it was at 3 months ago or a year ago or 2 years ago is of very little concern. Where is the dumb money going now? Because we need to go the other way. That is the question that is top of mind. Now, it's good. I understand the need and the desire to trade with the trend more than you do trade, quote, against the trend. But when you keep those two things in mind, how trend and counter trend often just depends on how you're looking at your own charts. And in the end, the big banks don't care anyway, and they're the ones that move the price. When you factor those two things in, we can reasonably conclude that it just doesn't matter if you're trading with the overall trend or if you're not. Our goal as trend traders is to be able to determine when a new trend is about to happen or a continuation of an old trend is about to happen, jump on board, and ride that trade as long as we can. It doesn't matter where that trend is in the overall scheme of things, as long as there's actually one happening. We want to put a system together that best recognizes that and gets us in at the best time. Simple as that. And I think this ties in pretty nicely with the very first part of that question, when Lindsay asked, how do I know that I'm not in reversal territory anymore, which is where I clearly don't want to be, and officially into trend territory, which is where I do want to be. She was a reversal trader before. She knows what that looks like. How do I know when I'm officially out of that reversal territory and into trend territory, which is where we play? Now, this is, of course, the million-dollar question for trend traders. When are we out of that reversal territory, and when are we finally into real trend territory? And now there's some good news and some bad news on this front. The bad news is we'll never really know. We only really know for sure in hindsight. I say it all the time, you never know how far a trend's going to run. Let's say you just entered a short on the euro dollar. Are you getting in at the 20% mark on the overall trend, or are you getting in more towards the 90% mark of the overall trend? You really have no idea. You certainly hope you're getting in as early as possible, but in the end you really don't know. So it's really hard to look at it that way. But just know this, and this is the good news. This whole system that we've been putting together this entire time is designed to get us into those trends at the best possible time. And the best indicators out there for this system do a really good job of not getting us in too early, which would be reversal territory. So I'm going to use the MACD as an example here. Again, I'm not a fan of the MACD overall, but I really do like it for teaching purposes. And if you refer back to that video, I'm pretty sure I give an example of this. So when both lines on the MACD are under zero and they cross upward, that is your classic MACD reversal trade signal. And this is typically not what you want for numerous reasons that we've already covered in the reversal video, in the RSI video. We've been over the reasons why you generally want to ignore signals like that. But then you wait until those lines cross back up across zero. That is the MACD telling you, okay, we're no longer in reversal territory, we are now in trend territory. So as much as I don't endorse the MACD, that is a great example of the difference between reversal territory and trend territory. And because there is no real clear definition for this, that example right there is the best definition I can give you. And then if you go back to the trend indicators video, I'm going to link the MACD and the trend indicators video both in the show notes. None of those examples I showed you got you into the trade right as things were turning. They all waited. They waited to see if that reversal was a false reversal. And once it no longer was, and price kept going that way, then the indicator said, okay, now it's time to go long or short. Every single trader out there that is trying to trade the no-nonsense Forex way has used that video as their main guide in terms of going out and finding the best indicator for them. So all you former reversal traders out there that want to trade our way, consult that video. In the end, there's no real way I can sit here and define it, because we never really know officially where that trend began until we look back on it in hindsight. So I can't really answer that, even though that is the question that I'm sure every trend trader on the planet would love to know. But that is why these indicators exist, and that is why they need to be a part of your system. And then in terms of trading counter trend or not, don't worry about it. When it comes to the way we trade, it's really overrated. And just let your indicators do the work for you. We are trying to enter trends as they happen. Whether it's a brand new one or whether it's a continuation of an old one, we don't care. We just want in. We want in at the best possible times, and that's what our system is designed to do. Now, I know there is quite a group of you out there that have been trading the no-nonsense Forex way for a while and have been putting your system together for a while now that have listened to this entire podcast and said, well, I pretty much knew all of that. And my response to you is, well, good. I'm glad you know, but not everybody knows. And this is the type of question I've gotten quite a few times. And I think this is a question that confronts a lot of traders because we are so indoctrinated and taught from the beginning that the trend is your friend, always trade with the trend, never do anything else. And so as natural trend traders, we look at times where we might be trading counter trend and say, okay, should we be doing this? Should I be putting full risk on this trade? And the answer is always yes. As long as it fits all of your other requirements, go right ahead. Don't worry if you're with the trend or slightly against the trend. As long as you're not trading reversals, as long as your system says go, you're doing it right. So this particular episode of the Forex Q&A podcast may not have been tailored to every single one of my listeners, but it is definitely for a lot of you. And this Thursday's trading video is absolutely essential for every single one of you. It will not go down as my most popular video of all time. I already know that. But I think it will go down as one of my most essential, and one of the videos that ends up helping you the most when it's all said and done. Can you guess what it is? I've talked about it already, but stay tuned for that. In the meantime, you have a lot of work ahead of you. Matching the right confirmation indicator with the right volume indicator takes a lot of work. Don't be frustrated if you're not getting the results you want right away. Don't get frustrated when you see other traders out there that have already gotten great results in a very short amount of time. It doesn't matter how soon you get there, as long as you get there. Foreshadowing. Just keep grinding out, keep putting in the work. Let's go get it.